that bleed sort of deepening in the red as we've gone through the day. ONGC is the other one. Now, both of these have been weak since this morning, but of course, the sell side getting stronger as we go towards close of trade. BPCL, surprisingly, I mean, low crude prices should ordinarily be not a bad thing for BPCL at all, but has seen pressure coming in. In fact, I would say autos overall are not having a great day unless you're a Bajaj auto. Then it's a different story. And that's really a tale of two auto companies on the Nifty chart today, because M&M down as well, about 1.5%. A whole host of old economy stocks suffering. SBI, L&T, NTPC, Hindalco, steel metals also looking like they're under pressure. So that's really on the bearish side of things. But what is working? I mean, Bajaj Auto is a whole different story. Is it a case that as we're seeing investors exit Tata Motors, are they looking at Bajaj Auto instead? And you know, that could be one question as well, because relatively to passenger vehicles, the two-wheeler space is looking like it is going to benefit from rural recovery. Asian Paints, again, no brainer over there, because low crude prices means lower input costs for paint companies. That stock about 2.5%. Bajaj Finance possibly buzzing at the blockbuster hit, which is the Bajaj Housing IPO. Now subscribed over 22, 23 times that I checked last. So definitely sentimentally working well for Bajaj Finance as well. So even Shriram Finance not doing too badly. Bharti, I would say that look at the telecom pack today has been fairly positive, and Hersh will pull up what's happening with Vodafone as well. But that's the story there. Somewhere in the middle are your FMCG names, your HUL, ITCs, etc. But yes, definitely more red on the screen today. I'll quickly pull up the advanced decline ratios as well, just to give you a sense of the market breadth and why it is seeming that negative. Remember, this is also the day of the Bank Nifty expiry and that pressure coming in. So you can see midday that gap widening with now declines overshooting advances by a fair bit. In fact, let's just pull up the Bank Nifty and its constituents for a second. Before we go into more detailing on the broader end of the spectrum. And there you have it, the pressure definitely coming in from the Bank Nifty. Yeah, and PNB there as the top loser on the Bank Nifty. I just want to pull up what's happening with mid-cap and small-cap indices before I hand it over to Hersh. And sell-off is across the board, really. I mean, the mid-cap index still in the red, unlike the small-cap index. That's where the big hit has been. 0.5% down on the Nifty small-cap 250s for the broader end of the spectrum hurting, of course, apart from a Bajaj Auto, etc. Let's also tell you what's going to be important, and in just a bit from now, we will get our my colleague up to tell you what's expected on the cabinet meet. There's a cabinet meet today, this evening, in fact, and you could see a new version of an EV policy, like a new version of FAME coming in. So what will that look like? They're calling it the PME Drive, which will replace FAME 3. That entire pack also in focus. But Hersh, the broader end of the spectrum is where the hit is even harder, isn't it?
Well, yes, several movers, Tamanna, in trade. You know, let me speak about the positives in an otherwise what's looking like an increasingly weak market as we've progressed. Something like a Goa Carbon, and you're also seeing in similar strides, Southern Petro, a couple of plants opened up for both of these, and you're seeing a good move on both of those in trade. Ramco Cements Systems, of course, beg your pardon, new product launch, and on the back of that, up 2% odd. You're also seeing good traction in Premier Explosives, along with Astra Micro, both of those agreeing to an MOU with regard to both research as well as sales, so product as well as sales. You're seeing good traction again in some of the other, if we can pull up ONGC and other OMCs, you know, Oil India and the like. You're seeing pressure on all of those. So 4% lower on ONGC, Oil India 4.5% lower. Let's also pull up something like a HPCL, BPCL. Yes, please, 2.5% on HPCL. So some pressure coming in on some of these oil marketing companies. Outside of that, you're seeing pressure on IRB Infra, 3.3% lower after likely up to 20 kilometers that you know that you would journey, you would not need to pay any toll for. So that one under pressure. Of course, some clarity needed on the impact on the company, but 3% lower right off the bat in trade today. CSC also trending lower. FEM Lemon Tree was up in trade for most of the day, but has now slipped into the red. So those are some of the other stocks which are buzzing. On the back of brokerages, we did speak about quite a few today morning. Tata Motors, of course, down 6%. Vodafone down nearly 2.5%. That one in focus all through the week. We've had notes coming in on telecom as well. Today we had JP Morgan coming in. Indus Towers up 1% on the back of that. So that one holding up on some of the gains that it has made. Bharti Hexagon also, JP Morgan constructive. So that one also up around 0.5% odd. So whole host of stocks buzzing on both sides, red and green. Tamanna.
Yeah, absolutely. And one of the big factors is going to be, especially for auto companies, is some of these cabinet decisions that we could see today. So the Modi government could take a decision to provide Ayushman Bharat insurance to senior citizens. The meeting will be held today, and sources tell us that PME bus Seva payment security for new electric buses also could be approved. Apart from this, there could be a new version of FAME 3, which will be called PME Drive. Prashant, in fact, my colleague from the NDTV network joins us to tell us more. Prashant, what is expected today?
Well, Tamanna, you see, Modi government has been pushing for, for the people to use electric vehicles and for the government to use public transport involving electric buses and electric cars. And in its endeavor now, FAME 2, the tenure for FAME 2 ended on March 31st, 2024, and FAME 3 was expected to be cleared in the next couple of months. But now I think my sources have been telling me that government has now decided to replace FAME 3 with PME Drive. That means that the government is going to launch a new scheme today, and it is most likely to be approved by the Union Cabinet meeting, which will start at 5 p.m. And this PME Drive scheme, under this scheme, Modi government will give subsidy to the tune of 11,000 crore for the manufacturing of electric vehicles comprising cars and buses and all kinds of electric vehicles. Second scheme also involving electric vehicles that is likely to be approved, as you pointed out, PME Seva payment facility. It is essentially meant for buying electric buses for public transport. So Modi government is going to approve two new schemes related to electric vehicles in today's cabinet meeting.
Okay, thank you so much, Prashant, for joining us there with all of those details on the NDTV network. And clearly, that's going to be the focus of the cabinet meeting this evening. Of course, we'll get you all that live coverage and what this means. The Nifty Auto, meanwhile, completely pummeled, but that's thanks to Tata Motors. I mean, pull up the Nifty Auto constituents and you'll see that as well. Tata Motors there completely, 5.5% down now. Bajaj Auto, on the other hand, 4% up. Apollo Tyres, all right. Tyre companies are doing well because, again, because of low crude prices, their input costs have gone down, and that has sentimentally been positive. But across the board, you're seeing quite a bit of pain. Samvardhana and the likes, due to the BMW news. Remember, BMW has come and reduced its sales forecast, and a whole host of auto and companies are getting hit. Because of that, Samvardhana is among them. Now, Ruchit Jain is joining us now from 5paisa.com. Ruchit, a very good afternoon to you and great to have you on the show. Let's start with your index calls, especially the Bank Nifty. Expiry day is turning out to be a rough one.
Yes, hi, very good afternoon, Tamanna. It seems that we are into a short-term consolidation phase for the index, where 25,100, 150 is seen as a crucial resistance. This entire last 5-6 days correction, which you have seen, that 61.8% retracement of that is placed in this range of 25,100 to 150. On the other hand, crucial support for the market is placed around 24,800 to 750. Now, if you look at the data, since last couple of trading sessions, in the F&O segment, we have not seen any addition of fresh positions on either side. The FIs have a long short ratio of about 64%, which is stagnant since last 2-3 days. Client section, which includes the retail traders and HNIs, have a long short ratio of around 46-47%, and there's no change in this data since last 2-3 days. So this clearly indicates that no new positions are getting formed for a directional move. So we might see a continuation of this consolidation in the near term. So for index, we are expecting that the index could test that lower end of the range of around 24,800 to 750 before we see any kind of a breakout on the either side. But more or less, I think it should remain range bound from a short-term perspective.
Okay, that's on the index. Just, Ruchit, just at the start of the session or start of the show, let's get your calls also for the rest of the trading day.
Yeah, so a couple of recommendations. First would be a buy call in Biocon. So the pharma space especially has been doing quite well since last few days, and irrespective of what the entire broader markets are doing, this is one the sector where the high top high bottom structure is getting continued. Now Biocon has seen a price up move which is supported by very good volumes. The near term trend still remains positive. So at current levels, one can look for buying opportunities and look to add if we get any kind of dip towards 378, 380 range, because that's a crucial support from for a short term. So keep a stop loss below 370 on the entire long positions and expect targets around 415 to 420 in the short term. And a sell call would be there for RT Industries. So a relative underperformer within the sector, if you see last few trading sessions. In fact, last quarter results when came out, we witnessed a sharp fall in the stock. Post that, in spite of good momentum in other stocks within the sector, this stock has not able to show any kind of strength. Look at the derivative segment data today. The price correction has been seen with a rise in open interest of about 10% only in today's trading session, which clearly indicates fresh short build-ups have been going on in the stock. So at current levels, one can go short on RT Industries, keeping stop loss below 585 and expect targets around 555 to 550.
All right, those are Ruchit's picks for this afternoon, but clearly the stock of the day standing out is Tata Motors. Not for the good, 20,000 odd crore of market cap being wiped out, and along with it though, Bajaj Auto seems to be buzzing. So Tata Motors falling nearly 6%, Bajaj Auto is actually gaining. Puneet, give us an understanding of what exactly is happening.
Well, thanks for that. So, essentially, just the key question that is smart money moving away from Tata Motors now, given this particular bearish note that is coming now because JLR was one of the most standing outcomes of the industry because, the commercial vehicle as passenger vehicle segment in India hasn't been performing well and recovery is only in H2. So that's the key output. Essentially, Bajaj Auto has hit all-time high also in the trading session today, while Tata Motors, just a couple of qualitative points. This is its longest losing streak in about 16 years. And also that the stock has fallen for a 9th straight day in the session today. Stock has fallen about 8% in this particular month, which is, while the benchmark is up roughly 2.7%, the Nifty essentially. Now, there are two key reasons we want to highlight here. The first one is, of course, the UBS note. It's maintained a sell rating with a target price of 825 rupees per share, a 20% downside from the current levels as well. And essentially, they are saying that, Range Rover Sports, the premium model of the company in the JLR division, has essentially seen the discount rise very substantially in the month of July and August. Now, apart from that, they have mentioned that there are 2-3 successful models such as the Defender as well as Sport. They had a very extensive run in the last 3 to 4 years, but that seemed to have been slowing down. And the only way they will be able to play the growth story in JLR will be through discounts because they don't have any other launches in this particular for JLR. JLR will essentially transition to an EV only company next year, but launches will come only in FY26. Apart from that, they're seeing that rising discounts as well as moderating growth for the segment is a key negative, and they have mentioned that CV demand, as we mentioned at the start, as well as the passenger vehicle India business has been wobbly. So that's one of the key negative reasons for Tata Motors falling. Apart from that, we just feel like that the fund managers might be changing the allocation within the auto segment to two-wheelers, and the reason is that in Q1 of FY25 we saw 17% growth in sales for two-wheelers as an industry as a whole, while the passenger vehicle industry grew by roughly just 6%, and that's also because Mahindra grew by 20%. So both Maruti and Tata Motors haven't been performing well in terms of sales. That is one key thing. As well, Bajaj Auto, the valuations are very attractive, roughly at 25 times price to earnings of FY26, and someone like a TVS is at 35 times. So it definitely fits right in the middle of Hero as well as someone like a TVS. They're not expensive, but playing across the electric vehicle as well as the CNG theme. So that's another key aspect to look at, especially for Tata Motors.
Right, 138%. That's the return that Bajaj Auto has given over the last 12 months. It's been such a solid ride for Bajaj Auto. But Puneet, while I have you, give us your take on this FAME 3 PME drive. What's your take?
Well, definitely, just a couple of points I wanted to highlight. So, allocation is expected to be around 11,000 crores, which is higher than the 10,000 for FAME 2. But what I would be looking at is the allocation within these schemes. Now, in FAME 2, there was 40% for e-buses. Will that same proportion continue is one of the key things to watch out for. And also another thing that we now have the e-LCV, the electric light commercial vehicles in the market now, which has been launched by Tata Motors as well as Ashok Leyland. Now, that's something which was not taken into consideration in the previous FAME 2 scheme. So if the allocation has increased, does that mean that this has been taken into consideration as well? That's something, one of the most important things, because e-LCV market is very huge. We've already seen Tata Motors sell 5,000 e-LCVs in the market, and it's going to be the new normal for the next 5 years. So if this allocation of 11,000 crores is for the next 3 to 5 years, this has to be taken into consideration. So one important thing will be the allocation within this 11,000 crores for e-buses, for electric LCVs, as well as, the medium to heavy commercial vehicles as well, because there is only some talks on it being LNG right now, and electric is far away for the medium to heavy commercial vehicles. So that's one of the other things to look at. And of course, the main thing will be the four-wheelers, electric four-wheelers, because we've seen the demand also in the first 6 months being very wobbly for the passenger vehicle industry as a whole. So there are a lot of premium launches like the Curve coming at 17 lakhs, but that's essentially something that we should watch out for. Back to you.
All right, thanks for that, Puneet. Ruchit, let me come to you on a couple of these, at least buzzing stocks on the Nifty Auto, Tata Motors and Bajaj Auto. Your take with regard to what you expect going forward and what levels to look out for now?
So I'll start with Bajaj Auto. There's no doubt about the trend for the stock, irrespective of what the other stocks from the sector are doing. A clear buying interest has been seen in the stock. The high top, high bottom structure is getting continued, and the recent higher bottom at 10,800 now becomes a very crucial support for at least even for the short term. So I think until we see any kind of change in the structure, the relative outperformance is expected to continue. Even if you look at the volumes in today's trading session, it's quite high compared to its daily average. So the volumes are good. Stock is rallying in spite of the other stocks within the same sector not doing well. This is clear signs of relative strength, and hence that uptrend could continue. Now coming on to Tata Motors, today's gap down, the stock has breached that 89 EMS support, which is usually seen very important from short to medium term. So I think this could lead to some underperformance in the short term. However, on the medium term charts, around 940, 950 is one level where again the 40 EMA on the weekly charts is coming. So that will be the crucial test, whether it breaks that level as well and see some further price-wise correction, or it slips into a consolidation or a time-wise correction for that. So for now, we are not advising to do any kind of bottom fishing in this today's 6% fall, but rather around 940, 950, that will be the range where next support is placed. So we will review around those levels.
Okay. Deven Choksi also with us. Very good afternoon, Deven. Great to speak with you as always, and especially today when, I think the market is trying to figure out what direction, and the mood has turned a fair bit. You've seen markets come off highs, the biggest pain point in auto. So let me start with your take on whether Tata Motors really deserves the kind of bashing it's getting. It's a UBS report, yes. It's a 1 year, 12-month target price, really. Is it really that much of an issue right now, fundamentally, that you see in Tata Motors?
So, good afternoon, Tamanna. I think, as I see it, I think a little bit deeper inside the subject. What I find, I think on one side, we are seeing the commodity prices dropping because of the crude oil prices, and the resultant commodity prices are dropping, which is basically likely to see the productive environment going forward for most of the industries, including those who are using commodity as a base material. Now look at the case of automobile and look at the case of Tata Motors. On one side, you have got the inventory already in the books. On other side, I think you're having a situation of commodity price dropping, which means I think the raw material price is coming down to that extent. I think they will have a relatively better times going forward as far as the vehicle is concerned. Had they not resorted to this discount and had they not resorted to clearing their inventory first, probably I think it would have created a serious problem to them in subsequent period of time. So even if it means that I think for a quarter, I think if the company has to take a hit, they have taken a hit in the passenger vehicle segment, probably clearing of the inventory. Mind well, the underlying demand is not going away. Maybe I think the validation of this particular thought will happen once I think the full discounted related impact I think is playing out in the market and when the buying takes place. In my viewpoint, ahead of this festive season, I think the bringing down the prices of the vehicles would not only mean clearing the inventory, but also repairing or preventing the balance sheet for getting into kind of a damage and the damage control mode that they have implemented. So I am relatively more confident, particularly also because of the fact that I think the commercial vehicle business is a robust business. I think it is producing good revenue and the profit both. To an extent, passenger vehicle business will get affected, but I think the commercial business will probably support the company at this point of time. So not that everything is lost. Maybe I think one can probably see the reaction to the report, which has come up from the analysts. But I believe that I think the stock price should stabilize eventually. And I think buying at the low level cannot be ruled out, I think, in this kind of a situation.
Tushar is joining in now to speak more about, no, we're not talking about Tata Motors, but we're back to what we'll see in the cabinet today. And Tushar, you broke this story on the 2nd of September on NDTV Profit, where you talked about a new version of FAME 3 that we will see. We've now seen a quote from the Heavy Industries Minister at an event which you were attending as well, talking about this. What details can you add?
Yeah, hi Tamanna. So we can now report that FAME 3 is coming at this point of time, but it may not be called FAME 3 altogether. It may be called PM E-Drive EV subsidy scheme. That's what we are hearing from sources. What sources also telling us that the outlay could be around 11,000 crore rupees. Now that is significant in the way that it actually compares what the outlay for FAME 2 was, which was about 11,500 crore rupees over a period of 5 years from FY20 to FY24. I remember FAME 2 expired on 31st of March this year. So remember, FAME 2 has been very successful in increasing EV adoption in India. About 7 to 8% of the two-wheel industry is now electric. 2% is 2% adoption has been seen in the passenger vehicle space. Commercial vehicles have also seen substantial adoption. The PM E-Drive scheme, so to speak, whatever it's called, will have an outlay of 11,000 crores. But at this point of time, we don't know for how many years. Seems like it will be at least for the 5 years. What was the case with FAME 2? The Heavy Industries Minister had actually said that the new scheme, FAME 3 or otherwise, whatever it's called, will fill the lacunae that was left behind by FAME 2. Now, there were some gaps in transmission of the subsidy, how it reached the end consumer. People are expecting that this gap will now be filled. There's some leakages as far as the subsidy dispensing or disbursing the subsidy was concerned. Also, we have to also consider that actually yesterday at the Siam convention, commercial vehicles makers said that they want a higher outlay under the new EV subsidy scheme that's going to come if penetrations have to reach about 10%. We see that Indians are already warming up to the idea of an electric two-wheeler. So any kind of support for trucks, buses and passenger vehicles will be more than welcome. Tamanna.
All right. Thanks for that, Tushar. And of course, that was a news break by the NDTV network. So thanks for that. But, let's quickly switch focus. Actually, before I do that, Devinbhai, if I can have your take, we just want your view with regard to whether two-wheeler is a better play at this point than the traditional Tata Motors CV plus PV and the likes. Is two-wheeler the better play in your opinion?
Well, I think generalization would be difficult, but I believe that I think strategy is working good for companies like Bajaj at this point of time. They are basically into the premiumization drive. the new range of vehicle which they have brought in, I think they are not only generating the higher value of sales, but also producing better profits for them. So that is a good positive point, as we call it, be it in the area of three-wheelers, be it in the area of multi-fuel engine, I think, which they have created, including the CNG engine that they have created for motorcycle. And also, I think the electric vehicle scooters, I think, where probably the company is not a big time loser compared to others. So to a greater extent, I think it's a very stable portfolio for Bajaj Auto. And at the same time, the global market environment is somewhat, I think, turning favorable for them as compared to what it was in the previous year. So one is the domestic market and the second is the global market. Both of them working together, and the company is likely to report better numbers than the last year. Fortunately, the valuation-wise comparable valuation of Bajaj, I think, is relatively lower in two-wheeler space. That is why I think the stock is going up. I don't think that I would generalize the two-wheeler space as a whole for the improvement in the business. I think the business improvement is understood because the rural demand is picking up. But at the same time, I think the larger amount of advantage goes to Bajaj for the reasons which I explained a while back.
All right. Time to slip into a very short break. We've had a long chat on auto, actually. So many moving parts. But on the other side, we'll get you top buy today, sell tomorrow recommendations, as well as talk about China steel prices. Impact of that not really visible on steel stocks in India, but nonetheless real because we've seen a contraction there. Stay tuned.
right, welcome back. Quick check on whether you've seen any kind of recovery in the markets, and the answer is unfortunately no. Just pull up that intraday chart of the Nifty and it's getting deeper actually. The sell-off is getting deeper. The Nifty about 0.5% down. I mean, will we be able to hold on to the 24,900 levels at close is also now a big question, frankly. And Tata Motors, of course, adding to that pain point, but so is RIL, so is L&T, SBI, all the heavyweights really. I mean, saving grace coming in from the Bajaj pack, Auto and Fin, and Asian Paints to some extent. But metals is another space which has seen quite a bit of bearishness today through the day, and one of the reasons is that steel prices in the world's largest producer, China, have fallen to their lowest levels since May 2017, in fact to pre-pandemic lows. This comes on the back of weak manufacturing activity and a downturn in the property market in China. Mihika joins in with more details.
Prices, Chinese steel prices are at the lowest level since May of 2017 actually. Current prices stand at CNY 3,073 per metric ton. Prices are down 22% in the past 1 year and down 17% since the start of July 2024. When we talk about what's causing the pressure in Chinese steel prices, one is the decreased demand due to the real estate crisis as well as a weak construction sector, which is the primary consumer of steel. Broader economic slowdown has also impacted demand from other sectors like manufacturing and infrastructure. The country's steel market is also suffering from oversupply because historically the China steel market has seen overcapacity and China has been producing more steel than the market can actually absorb. Furthermore, US trade restrictions are harming the Chinese steel exports. That's why it's limiting the ability of Chinese producers to sell off the excess steel in China to foreign markets. And this kind of weakness was also spilled over onto India. Indian steel prices were down 2% week on week to 49,000 rupees per ton as of September 9th. Prices are also down 15% year on year, and this is mainly due to the rising imports. And this is despite India being the second largest steel producer in the world and excess domestic supplies amid subdued demand. When you talk about who gets impacted, well, lower steel prices are negative for counters like Steel Authority of India, Tata Steel, JSW Steel. Lower steel prices basically reduce their profit margins. Companies could also have to lower their selling prices, which is something that we have seen in the market to remain competitive with, on a domestic as well as a global front. And they could also see inventory losses. Their current inventories are at a value higher than the prices right now. But they do have some relief on the raw material front. Lower steel prices often coincide with lower raw material prices, and that's what we've seen. Iron ore prices globally as well as in Odisha was down 11% in the last 3 months. Coking coal prices are also down 8.1% week on week to $159 per ton, which marking a new 52-week low.
Okay, thank you for that, Mehika. So clearly steel under pressure. I'm going to come to Devin Choksi on his take on the entire story from an Indian perspective and the metals and steel story. I mean, this persistent concern about Chinese demand, and you're seeing that as an overall trend, right? Whether it's crude prices, whether it's steel prices. Do you see that worsening from the Indian context?
On the contrary, I believe that given the strong demand environment in India because of the government spending on the infrastructure and corresponding spending by the industry for catering to the infrastructure demand that the government is creating, I believe that anything which is lower on the metal and the commodity prices is going to be all the more advantageous both on the company's balance sheets or respective companies' balance sheet as far as the cost of material is concerned. And at the same time, I think the country's balance sheet, because of your ability to produce at a cheaper cost and able to, deliver it in the marketplace. So in my viewpoint, I think if you keep aside 1 quarter of mark-to-market inventory loss in some of the balance sheet because of the commodity nature of provisions in the books, I think beyond that, if you start seeing it, probably it's going to be all the more advantageous. And I squarely believe that I think most of the commodities will have relatively better time going forward with the fall in the input prices. So certainly maybe leave aside this 1 quarter, but otherwise I think the things are looking pretty stable to me and the growth orientation has not changed at all, I think, the businesses.
Okay, so metals looking tough there. Ruchit, let's look at some other buzzers today. And I want to talk to you a bit about what's happening in the oil and gas segment, thanks to crude prices. So let's start with an ONGC, one of the big losers of the day. Do you see a further downside here, or is this an opportunity to come into ONGC at 284?
Yes, so certainly a direct correlation with the crude oil prices, then that's why we have seen this correction in last few trading sessions. But if I look at a bit of longer term charts, then no, the crucial long term supports are still intact. So it just seems to be a corrective phase within a longer term uptrend. Not at current levels, but if we see some more dips towards maybe that 270, 260 range, then the risk reward ratio would become favorable for tracking contra longs from a positional perspective there. So I would wait for some more declines towards maybe around 260, 270 range. In that range, one can initiate fresh longs from a mid-term perspective.
Okay. ONGC is the story over there, and you can definitely initiate calls from a long-term perspective. Rujit, are you as excited about Bajaj Auto as the street seems to be today?
Yes, the overall trend seems, irrespective of what other stocks from the sector are doing. I think this clear relative outperformance has been supported by very high volumes also. Look at today's volume, it's much better than the daily average volume. Not only today's volume, last 15-20 trading sessions, the stock has already seen a rise in its volume activity. So I think, yes, when the stock shows a good outperformance even during the corrective phases of the markets, I think that's where the real strength lies, and that outperformance could continue going ahead as well.
Okay. A few buzzers from the broader markets also that we should look at. Prism Johnson is one of them, just up and away in trade on massive volumes. And, you know, we've been seeing that for the last couple of days. Zaggle Prepaid is another one. Rujit, any of these on your radar?
Well, already the stocks have seen a good run up, both Prism as well as Zaggle. So, I wouldn't recommend fresh buying because the stop losses would be too far from current levels for fresh buys. But yes, in case if you see any kind of dips in the near future, then one can take a view on these stocks of fresh entry. But risk reward ratio perspective, no, won't recommend at current levels.
Okay. Devin, any of these that you're tracking? Prism Johnson has been on a tear completely. Is this just a volumes game, or you're seeing anything exciting there?
Tamanna, I haven't looked at this company for some time, so it's different from the TV comments.
Okay, so no great interest there right now, at least from Devin Choksi. Some other movers today, Century Textiles definitely one. Suzlon is on its continuous uptrend. Page Industries is an interesting one because this morning the thought was that Reliance Retail entering into a competitive segment of innerwear would be a hit for Page Industries, but that doesn't seem to be how it's played out at all. So Page Industries actually doing fairly well in trade. But meanwhile, where is all the money going from investors? Investors continue to push significant money into NFOs, making it the second highest monthly inflows this year. But which sector tops the NFO list? Alex is joining us with that analysis. Alex, the interesting thing is that most advisors will say NFOs is perhaps not the best place for investors to put money, but that's not what investors are hearing.
Absolutely. In fact, NFOs continue to be the primary route that people are choosing, at least over the last 4 months, to push money into mutual fund schemes. We've been speaking this week about the amount of money waiting in the wings because of the kind of subscription numbers that you're seeing in IPOs. Now, it seems that there's a lot of money going into NFOs as well. Just a few data points to put things into context. In the year so far, I'm talking about 2024, 2.4 lakh crore or thereabouts has gone into actively managed equity mutual fund schemes. As much as 62,700 crore or thereabouts has gone through the NFO route. And if you look at just the sectoral and thematic funds, what we've been speaking about for the last few months, as much as 53,600 odd crore, close to 53,700 crore has gone into just sectoral and thematic new fund offers. Of that, get this, just the last 4 months has seen inflows through NFOs into sectoral and thematic funds of over 42,500 crore rupees. Now, you'll be interested perhaps to find out which sectors are being favored by mutual fund houses. And here too, there are a few interesting data points because most NFOs launched in this period, and there are 29 that have been launched in the year so far, most have been manufacturing funds, and that's a bit of a theme that is playing out, of course. But there's also business cycle funds and special opportunities funds, as well as 3 innovation funds. and then 3 banking and financial services funds. All of the others are incidental, but the most interest, of course, is in manufacturing funds. Tamanna, you said it, there is no benefit to investing in new fund offers, but that still seems to be a lure.
Absolutely. I mean, I suppose it's not the same thing at all, but like the excitement about IPOs, there's an excitement about new fund offers as well. And in fact, on IPOs, thank you for that, Alex. Just on IPOs, Hersh, I know you've been tracking the blockbuster IPO of the day, Bajaj Housing Finance. And it's just some crazy numbers coming in there.
Absolutely, Tamanna. So you're seeing Bajaj Housing 50 times oversubscription now in terms
50
of...
times?
50 times, yes.
Okay.
So you've got roughly 3.2 lakh crore rupees for 6,560 crore rupee IPO.
Blocked for Bajaj Finance.
Blocked for Bajaj
It's Bajaj Housing Finance.
Yeah,
It's insane.
Yes.
So when Sanjeev Bajaj spoke to us on the day that the anchor book was opening, of course, he didn't have those details. He said, I am overwhelmed by the reception to this IPO. I wonder what term he could use now, because he was overwhelmed then. This is truly overwhelming.
Yeah, absolutely. And a lot of it coming in from your QIBs,
okay,
where you're seeing 158x in terms of oversubscription. So institutions really biting into this one. NII is seeing 39 times. Retail, just about 6.5. Now, of course, it's large nonetheless, but just in terms of some of the other numbers that we're seeing in terms of interest, retail seems to be more softer. And you're seeing employees at just about 2 times and shareholder reservation quota at almost 17 times. And total oversubscription currently stands at 50 times. Of course, have to wait and watch by the end of the day how much of that actually increases by, rather. So, but Devin, just to try and get your take on this one, the amount of money which is sitting on the sidelines, this just goes on to show the quantum of money sitting there, right?
Yeah, absolutely. I think on one side we have seen the IPO-led flipping, which is becoming, I think, a regular activity in our markets, giving handsome returns to most of the traders or investors. And I think the people have actually, I think, been benefited in the last few quarters, if I may have to say, I think last 2 years actually. I think a significant amount of gain has reached their portfolio. Certainly the quality people like Bajaj Housing Finance definitely would attract more interest. Also because of the fact that I think this is one company which has been, one group which has been successful in rewarding to the investors. And this particular housing finance company, which is now getting listed, has been clocking about 30% CAGR growth in its business in last 7 years. Should this formula continue, then probably every 3 years you're doubling the size of the balance sheet. And actually speaking, I think the entire housing finance business is only going to grow from here, given the size of penetration that I think real estate is having. So in my viewpoint, I think it's a right kind of a product, right kind of an idea in the market. And no wonder that I think institution who is flush with money is putting in a significantly large amount of applications, also because of the fact that they want to probably get the part of this application allotted to them. Investment opportunity for sure, I would say.
Right. I want to quickly also mark out some of the numbers flashing on the screen. The amount of wealth created by the Bajaj Group since 2008, and reason why we've taken 2008, because there was a major restructuring both in Bajaj Holdings, where Bajaj Auto got demerged, and Bajaj Finance, where Finserv got demerged. And Maharashtra Scooters, of course, acts as the holding company there for all of those. And just look at what 1 lakh invested in 2008 would look like today. 3 crore in Bajaj Finance. Now, if I just had to pull that back by a few years to 2004, Bajaj Finance would be 9 crore rupees. So it was a 3-bagger between 2004 and 2008. We're ignoring that. But nonetheless, it's been a 290-bagger even post that. So some real wealth been made by the Bajaj Group, which is what I think Deven Bhai seems to be highlighting also. And that's where he gets his bullishness from.
So Deven, if you recall the conversation we had a couple of days ago, I think the day when the listing opened, and I asked you about Bajaj Housing Finance, and you said it's like a lottery in case you get it or you don't get it. Now, 50 times subscribed. my question to you is for investors who have applied and may not get it, chances don't seem great. What do you do? Is this a listing day buy?
It's a good amount of guesswork, Tamanna, I would think so. But yes, I think from investment perspective, I think it's a buy opportunity from long-term investment point of view. Whether you are getting on a listing day at a good price, I'm not too sure. Given the kind of demand, what kind of listing price it would have, I think these are all guesswork at this point of time. But the fact remains that I think it's a good investment opportunity. Then convert and believe that it is going to remain for at least next few many years. I think a good investment opportunity for investors. So if you have not got allotment, I think don't have FOMO, but just simply I think stay invested by buying it from the market whenever you get a chance or opportunity.
Devenbhai, also the other piece that's been buzzing last couple of days is Century Textiles, and this whole kind of real estate play. It's been such a stellar run for realty over the last maybe 18 odd months. We've clocked life highs and we continue to build on that. Leverage is low, demand is strong, and inventory is probably at the lowest levels. Are you still constructive on real estate after the run-up that we've seen? Of course, fundamentals look strong, but are you still constructive, and do you believe that a longer cycle is what one can expect? How do you view this one, and what's the best way to play it, if at all?
Yeah, I think important point here that real estate for India is going to be, I think, next 25 years story actually. So frankly speaking, I think we are not likely to see a major kind of a downfall in this particular space, unless I think there are some events in a course of time. I think where probably I think some period you might see kind of a lull. But otherwise, I think real estate is likely to grow well. And I think the fundamental check on this, because of the higher amount of GDP growth happening in the country, more amount of discretionary spending power getting passed on in the hands of individuals. And that's where probably I think the housing real estate is definitely in demand along with the commercial real estate. Now, within the value chain, I think who should be the beneficiary? On one side, you have got a pure focus developers who would probably grow faster with the size of the balance sheet. So for them, the business is going to be continuously remaining the capital hungry business. On the other side, I think the financiers like Bajaj Housing Finance or HDFCs, they would be probably, I think, playing a significantly large role because I think the demand for finance is always going to be higher. And a mortgage product, I think the finance is relatively safe as far as lending business is concerned. Most important player in this entire thing, according to me, is going to be the building materials supplier. The likes of cable supplier or the lamp or light suppliers or the plumbing solutions providers, etc., are the ones I think are going to be the champions of this game, where they will continuously see higher amount of demand. In fact, I think for every 1 rupee of sale in the real estate, I expect, I think 1.5 to 2 rupee of sale happening for these building materials supplier companies. So certainly, I think they have a relatively larger role to play along with the housing finance company in this entire game.
Okay. Another space in focus, of course, is paints. And, we'll get Deven and Ruchit to talk about some of those paint names. But Berger in focus. We actually spoke with Berger Paints today and a good day too, because obviously fallen crude prices helps the company. In fact, Abhijit Roy talks about a positive impact on margins as well. Listen in.
As the crude prices go down, further decreases are expected. As you rightly said, it will not immediately impact across the board. Some of the raw materials will get impacted immediately. Some will come through in the next quarter because, we do hold stock of finished goods and raw materials. So that will impact in the third quarter, but some of it will definitely come in this quarter itself, which will boost the profitability. Well, we haven't calculated in that way, but I think, about 35 to 40% definitely will be immediately impacted. The rest will be basically we have some stocks. So, from that perspective, that will carry forward a little bit, into the next quarter. But prices have been dropping in the past as well, so margins will be reasonably decent for the entire paint industry this quarter. As I indicated last time also, normally we are in the range of 15 to 17, but this time it will cross that 17% level and will be at a higher level slightly. Largely because of the raw material prices softening.
Okay. All right, so that's the story on Berger Paints. Ruchit, you interested in Berger Paints, Indigo? Any of these stories are exciting you? Because, today crude prices, of course, have fallen overnight. You might continue to see crude prices softening. So that's the fundamental point of view. But has the run-up already taken place as far as the charts are concerned?
I think all the paint stocks have gone through a long consolidation phase. If I look at the position structures, since last couple of years, we have not seen any kind of high returns coming in most of the paint names. So I think the stocks are coming out of that consolidation phase, and this falling crude prices, there's a clear inverse correlation. So that should help the stock to give some further momentum on the upside. I think if I look at some comparative analysis within the stocks, then Asian Paints within this entire sector is looking most promising, where after 2022, we have seen a decent amount of price-wise correction as well as time-wise correction. And now the volumes have started increasing in last few trading sessions. So we expect the stock to head higher first towards its previous swing high, which was around 3550, 3600. And ultimately that should get also surpassed. So there has been a long underperformance if you look. And I think in spite of this recent run-up of last one or 2 weeks, still the stocks look much positive. And Asian Paints would be the preferred bet within this space.
Okay, Asian Paints is the preferred bet within this space. Devin, do you agree with that? That Asian Paints is the best bet? And remember, for the longest time, the conversation has been about a new entrant in the market and whether that's going to make an impact or not.
Leave that part aside, Tamanna, for a while. I think the new entrants who have entered into the market will definitely get some part of the market share. But the fact remains that I think the market in itself, I think, is offering significantly large amount of growth. So the established players like Asian Paint, I think, will definitely have better times going forward, largely because of the fact that I think they have a distributed manufacturing capacity, the plants available with them. So to a greater extent, they have the ability to supply when the market demand rises. That is what the festive season is all about. On the other side, what is more exciting is the crude oil prices falling. Along with that, all the derivative prices are also falling. And the input cost for paint manufacturing, when it comes down, I think it adds to the margin. So certainly, I think one should remain more confident that if the crude oil prices remains on a lower side, the margin improvement for paint manufacturers like Asian Paint will be significantly more than I think anything else. So to an extent, I think we believe that I think this is a reality going to last for a good time. And that's where, leave aside 1 quarter in which you might not see the higher amount of impact on the margin side because of the pipeline of inventory at a higher cost. But in subsequent quarters, if the crude oil prices remain low, then probably I think the margin impact will be seen positive in the books. Maybe second half of the financial year, should one get, I think, better price realization along with the margin improvement, the numbers would look pretty handsome for companies like Asian Paint in the second half of the financial year.
All right, switching focus, Brigade Enterprises on the back of its QIP spoke with the management, Pavitra Shankar, on the outlook for the sector as well as the company going forward. Listen in.
We've seen already a couple of years of really strong price increase. Despite that, any new launches are pretty much met with a lot of enthusiasm, which you can physically see by end customers. I'll talk about Brigade in Bangalore, Chennai, and Hyderabad upcoming soon, our launch. But basically, we are seeing a lot of end users come to our sites, respond to our digital marketing campaigns, have very serious conversations about, investing in the residential sector. So I think because of that, we are, and also seeing very quick conversions for the kind of units that they want to buy. Right. So I think from that perspective, we're seeing that it is still very solid demand, despite the price increases so far. Going forward, we are also not really expecting to push pricing so much. I think the pricing that we've seen over the last couple of years has been really healthy. The market is in a good place right now, and it should continue to grow in a stable manner without, expectations also being like, you will still continue to see double-digit and very high price increases. That's when people tend to get carried away. So if we can continue to grow in single-digit price over the next couple of years, I think that's really very good.
All right. Ruchit, some big movers in the space, at least today. You had Century Textiles, up 5% odd. Any views with regard to Century in particular or any others which you're finding interesting in the real estate space?
Well, if I look at the sector first, then I think Nifty Realty in last 2 or 3 months have seen some corrective phase and has shown a relative underperformance, where the recent new high in the benchmark index was there, but the Nifty Realty index has not rallied toward its previous high. So I think it's in a corrective phase, and that short-term correction within an uptrend could continue going ahead. So not much names from a trading perspective comes to my mind if one is looking from a real estate perspective. But yes, particularly if we talk about Century Textile, then the trend continues to be positive over here. A high top, high bottom structure technically is seen in the stock. The volumes are good in last couple of trading sessions post this news. And good thing is that any corrections which are there, which have been there recently, we have not seen any kind of volume-based sell-off when the stock is going down. So this indicates that relative outperformance could continue in Century Textile going ahead.
Okay. Ruchit, BTST, any ideas?
Havells is looking good from a BTST perspective. Continuation of the uptrend has been seen, and it's on the verge of that breakout of this last few days of consolidation. So I think one can go long on Havells over here, keeping stop loss below 1920 and expect target somewhere around 2030 to 2040.
Okay. Havells on radar. Havells up 2% as well today on what is otherwise a fairly dismal afternoon trade. I mean, not too bad. No huge sell-off, but definitely coming off its highs of the day. Thank you so much, Deven and Ruchit, for joining us today. Just less than about 3 minutes for market close to go, and it's been a tough expiry day. Bank Nifty, they're feeling the pain now, about 0.5% down. You're at least above 24,900 levels. So a bit of a recovery towards the very end. Nifty is still about 100 points down. And we're looking like we'll close at those levels. Let's pull up the heat map very quickly and see if there are any changes there. Tata Motors, I reckon, is still at the bottom. I mean, really a bad day for the stock. And in parts, one of the trigger, of course, is that UBS note, which looks at an 825 target price, is worried about not enough new launches, Jaguar, etc. ONGC also about 3.5% down. Wipro seeing a bit of a sharp move down, about 2% as well. Meanwhile, the story on this side of the spectrum also gets pretty interesting because you have Bajaj Auto up about 4%. Asian Paints there about 2% up. Bajaj Fin also about 1.5%. Shriram Finance doing well as well. You have some movement in FMCG, but I don't know if it's anything fantastic or a bit of a more defensive play. Remember, the rural theme definitely coming back into focus, and some of those FMCG stocks climbing up towards close. So whether it's a Britannia or an HUL, I see SBI Life and Divi is also recovering from the lows of the day. So we have some new players here. But let's get the advanced decline ratio up very quickly before Hersh comes in for the broader end of the spectrum. And yeah, I would say that gap has actually widened over the last few minutes. So Hersh, I think in the broader market, it's safe to say, at least on the small cap, the pain is even sharper.
Yes, it is. And we were closing very close to the day's lows. And that's not really good news. 18,220 odd was the low for the day. So we're probably 20 points away from the day's low, and very similar for the mid-cap index as well, maybe 40 points odd away from the day's low. So the pressure seems to be mounting. Can we have the intraday chart for both the Nifty mid-cap as well as the small cap? See how the day has played out, because it's likely closing very close to the lowest point. There you go. That's where all the weakness seems to be, right at the fag end of the day. And if we can also pull up the BSE 500, try and see which specific stocks have moved. Prism Johnson well off the day's highs, 9% higher now at close. Suzlon locked in upper circuit. Page Industries fascinatingly up 4% odd. There you go, we've closed for the day. Bajaj Auto definitely on the Nifty 50 itself. So it's a tale of two auto stocks on the Nifty 50, Bajaj Auto and Tata Motors being the second largest loser on the BSE 500 as well as the largest loser on the Nifty 50 as well. But among that, Oil India and IRB Infra featuring in this list of the top losers on the BSE 500.
IRB Infra, I reckon, because of the toll.
Yes.
The
so
toll
IRB
news.
Infra because of toll, and Oil India, of course.
So now no toll for at least 20 kilometers of travel is what the government has proposed. How they will implement it and know exactly how much someone is traveling is going to be through satellite. So that remains to be seen, and that will be an interesting one to watch.
And impact of that.
And impact of that, if at all. So Suzlon there continues. Interesting to see Shoppers Stop also spike up 8% in trade. 8%, yes. So yeah, there are some winners, but many more losers today. And for people who are looking at their portfolio at the end of the day, probably it's going to be a bit of a hit. But having said that, remember important data out after markets close from our perspective of CPI for the last month in the US, and that will be very key because remember the CPI and PPI, two inflation data points which are going to come out, will be the last ones before that Fed meet. So you could see the market mood changing dramatically at open tomorrow depending on what that data says. But for now, that's all the time we have. So from Hersh, me and the team that put the show together, thank you so much for joining us. Stay tuned, a lot more up on the other side.